Welcome to VRIC Media, the most trusted voice in the junior mining sector. Now, my guest today is the acid capitalist Hugh Hendry. Now, we cover a lot of ground today, including talking about why Hugh is sick and tired of hearing people talk about the BRICS organization. And today he gets into why. Now, agree with him or disagree, Hugh speaks sincerely as somebody who is no stranger to having skin in the game, used to manage a $1.5 billion global macro hedge fund. His opinion is worth listening to. Here is the acid capitalist Hugh Hendry. Enjoy.
All right, we're going to get rolling.
They helped create an economy that was completely addicted to cheap money.
You need to buy savings bonds or something. You need to be way, way, way out of this space.
I subscribe to Miss Piggy's rule of money management. Always manage to have more money, you know what I mean?
It wasn't but 2 years ago that everybody was saying China's economy was going to be bigger than that of the United States. It's gone in the exact opposite direction.
So we're going to jump right in.
For context, we're recording this on November 5th. It's election day. Who knows how the next 48 hours or 48 days are going to go. What you said is it doesn't matter which candidate takes office, right? Immediately I thought, yeah, medium term, long term, I agree with you, right? But then you added short term as well, which I thought was interesting. So either way, we may see some volatility, but it's not really going to change things because their economic policies don't differ enough. If I heard you correctly, does that mean that I may make the assumption, doesn't matter who takes office, the strategy is going to be rapid money expansion to appease near-term pain points in the economy, and maybe some nuance on the margins, but generally speaking, that'll be the policy. Is that it, Hugh, or what's your take?
Yeah, I can vibe with that. Of course, you're saying those golden delicious. You're using the lexicon of commodity loving social media channels. My prejudice is I'm picking up the plaque already. What was it you said about the norm will continue to be this tremendous expansion of the money supply of credit,
money expansion to appease near term pain points,
and that's why That's why we buy assets with finite supply against the infinity of fiat money. Here we are, gold to 3,000. I'm being jovial. I'm being lighthearted. Clearly, there is credence to that. I think there is too much credence, and I would say that the notions of this money supply or this monetary expansion are profoundly misunderstood and exaggerated. But it does exist, and it exists in a manner perhaps that your audience might fully appreciate in terms of the monetary expansion. And it comes back into this notion that the outcome of the election doesn't matter, okay? Because the principal economic force of the last 4 decades has been, can I say the emergence, but certainly the rise of the Chinese economy. Today, it now rivals Europe as the second largest economic bloc after America. And it is pursuing an economic policy that John Maynard Keynes, with profound dread and with profound passion, tried desperately to persuade his fellow kind of great thinkers back during the Bretton Woods conference at the end of the Second World War not to do. John Maynard Keynes was wonderfully pro-trade. Trade enriches our world. He was wonderfully pro the labor mobility across frontiers. He was desperately in favor of the mobility of culture and a cross-sharing of what makes us different, unique, but of course under the skin all the same. But what he was fastidiously against was the mobility of capital. And we live in a world where China elected, and it essentially was encouraged to go this path because we're talking about China. China attained World Trade Organization status back in 2001 or so during the Clinton presidency. And only 2 or so years prior to that, you'd had the Asian tiger crisis, when superstar fast-growing economies like Thailand crashed and their currencies devalued in the order of 85%. And it was a rush to the exits by foreign capital providers, which it didn't cause the calamity, but it very much made it happen, and perhaps it made it happen quicker. Regardless, China has opted to run a closed capital account, so it is it has a trade account, and it has been very, very successful with the economic policies. Clearly, everything is prioritized to the exporting, and exporting accounts for is one of the principal and increasingly at the margin today, the only growth mechanism they have. And that is aided and abetted by their fixed exchange rate. It's a dirty float. It is not determined by market forces. The renminbi or the yuan, I dismissively refer to it as the red cabbage. But it is set by bureaucrats at a level which, at the economic level, the currency is undervalued, which is to say that their exports are cheap. And the trade surplus of China vis-a-vis the rest of the world is enormous. It's enormous in the context of historical data. It's actually at the wide, if you will. So if we look at many data points, we can look at the absolute highs and the absolute lows, and we refer to them as wides. And we can look at previous trading hegemons, if you will, the U.S. in the first part of the 20th century. And we're at levels where it's very hard for that trade account to expand further without creating the ire and the contempt and the anger of neighboring countries. So if we come back to the election, Trump in his first term, and very much to the fore with his candidacy, is pursuing trade tariffs against the Chinese. Now, that very much is very, very poor economics, but it very much comes back to this very dominant export nation, which has run trade surpluses for 25 years. And economics is meant to be about mean reversion. Like when you get a trade surplus and you repeat it year after year, that a market seeking equilibrium, were it not for the malevolent force of the People's Bank of China, the central bank, scooping up the dollars received by the exporters, scooping them up, because if you're trying to buy red cabbage in Beijing, they don't take dollars, they take renminbi. That's why I call it red cabbage. And so all of the dollars you receive, you swap it with the central bank for the local currency. And then the central bank uses the red cabbage, so to speak, to buy U.S. treasuries and other very low financial risk securities. Now, when it does that, when it buys a U.S. risk-free asset, it's selling its currency and it's buying the dollar. And this is the process for why you create this kind of straight line in perpetuity. But the straight line is the wrong level. So when I say to you the policies of the two centrist parties in America are the same, the Biden administration, they did not jettison the Trump tariffs. And they're not really poo-pooing the idea. Now, if a party wanted to make a difference, if this election was going to really change the markets on the day that we're all watching this interview, the party would be introducing, it would be seeking to close the U.S. capital account. The U.S. would turn around and we say, you know what, we've been watching you Chinese, you're really, really smart. You are winning in this export business, but you're kind of winning at our disadvantage, and you're winning because we can't buy your currency. You've got a closed capital account. So think of it as flattery. We're just going to copy you. And so if you're the Chinese central bank and you want to buy 10-year US treasuries, we're going to put a tariff. We're going to put a withholding tax on that. And we're going to make it very hard for you to do that. Now, in the process, the Chinese currency, if we can say ceteris paribus, this preposterous Latin assumption of nothing else changes, and things changing would be politics by and large. But if the US was to have a closed capital account or to impair the mobility of international capital, the Chinese currency would appreciate. Chinese citizens would become richer vis-a-vis the rest of the world. And richer people kind of buy things. They buy like nice bags, makeup, houses, cars, and they tend to buy more products from overseas. And then the system would be allowed to achieve equilibrium. So no one is proposing that in the US. And that's why I would say to you that the system will perpetuate. And this is a system that, whilst it's principally aimed at the management of the exchange rate, but when you have a sovereign nation parking its capital into the US, it fundamentally changes the price of money, and it fundamentally creates a credit mechanism, which in the last 40 years has meant that all assets have traded higher, and we live in an environment of the overvaluation of everything.
Quick break here, guys. Today's episode is brought to you by Coppernico Metals. Now, regular viewers of my channel will be familiar with the entrepreneur behind Coppernico. His name is Ivan Bebek. Now, although a young man in this business, Ivan's already created tremendous value for his shareholders in the past, namely with Caden Resources, which he sold to Agnico Eagle, and Keegan Resources, which became a mine now owned by Galliano Gold. Now, Ivan has surrounded himself with expertise from BHP, Newmont, and BRICS on his board at Coppernico Metals. Check out coppernicometals.com. Now back to the interview. So I need to ask you then, why? What's the downside? There's obviously a reason that nobody is proposing a closed capital account. Nobody is proposing effectively tariffs on 10-year treasuries purchased by the Chinese. Immediately, I was like, doesn't the U.S. need the Chinese to buy these treasuries? What occurs if we start penalizing them for that activity? Can you speak to that, Hugh?
Absolutely. So, first of all, right, it's not Chinese hedge funds who are buying treasuries. It is the People's Bank of China. It's the Communist Party central bank buying, right? So, what can we deduct from that? They don't charge a performance fee. They're not interested in performance. Okay, they're not looking to make money on their treasury holdings. Just so happens they have. They made a lot of money. Okay, they are doing it for the greater social and economic need internally within China to create full employment and a robust and growing economy, which allows for their society to tolerate. Which is to tolerate a very restrictive cultural and a social regime, the totalitarian. So they buy treasuries to maintain, if you will, the goodwill of the people to run a totalitarian regime. So I want to say to you, if you were to charge them a 3% sales tax, a capital levy. On those purchases, they ain't going to go, oh, I'm not doing that, right? They're going to say, yeah, sure, okay? Because our number one objective is not to make money. Our number one objective as the Chinese Communist Party is to stay in permanent power and authority. So there's going to be no objection from them.
Interesting. So you don't think that tariffs would de-incentivize the Chinese Communist Party from purchasing treasuries? So then again, what's the hesitation from the U.S. establishment?
Yes, indeed. That was the penny that had failed to drop in my slot machine. Why is it not happening? Because the big money doesn't want it to happen, right? Who are how much are both presidential candidates spending on their presidential campaign. I mean, it runs into hundreds of millions of dollars. Yeah. And who are the people sending all of these hundreds of millions of dollars to the Democrats and the Republicans? Well, clearly, there are these new technology meme people, the richest people on earth. And Elon has been very vocal in his support for Trump. But there are countless Wall Street titans who contribute. Washington is run by money, right? And the big money is very much, what is the big money? Jay, you can get this. What is the big money like more than anything else?
Power?
Power, yeah. And when you've got power, you want more and more of it. So big money is very, very attracted by the status quo. Like, this regime has made big money big. Inertia. Yeah. Inertia is good. Like this. So what I'm kind of laboriously trying to display to you is that there is a monetary mechanism which begins in China, which is designed to undervalue their currency and gain an advantage in the export market, and that the greatest gravitational pull is U.S. risk-free assets, the gravitational pull being the liquidity, the deep liquidity of the markets, the rule of contract law. Things get done. Yes, we all have gripes, but as a mature, open democracy with all of the asset rights, the US is the place, as is the UK, as is Australia and New Zealand, but these are of a smaller magnitude. But this is a mechanism which creates credit, and it's a credit. So people, I'm sure you must talk about M2 and money supply all the time with your guests, right? Whenever I hear anyone talk about M2, they do not know what they're talking about. They would never manage a macro hedge fund. As a matter of introduction, I ran a global macro hedge fund for 15 years. My remit was to be eclectic. My remit was to be obtuse, elliptical, or just to be totally unlike any other hedge fund. So I made money when everyone blew up. And when everyone was making money, which is like 9 years out of 10, my challenge was not to blow up, like to come in flat. So I was like a free home insurance. Like, if your house burns down, I pay you out. But in the meantime, I was kind of sending you maybe $2 or $3 back every year on the $100 of capital that you had at risk. So that was me. It's not M2. It is not the creation of dollars domestically by US banks receiving, when a bank receives a deposit is a liability. And so the bank needs an asset to invest, to keep its ledger system, to keep its solvency, to preserve its net interest margins. That's M2, right? But over the last 40 years, that has become dwarfed. It's become almost insignificant versus the dollar standard, and that's a treasury collateral system. So money on the edge today, money on the perpendicular, is created by huge international banks engaging with each other as counterparties. And so you're my counterparty, I'm a Japanese bank, and I go to you and I say, I have $1 billion equivalent of JGB treasury bills. How many dollars, if I park it with you, if I offer that as collateral, how many dollars would you extend to me in return? That's the euro dollar system. And for the last 20, 30 years, the answer to that question has been zero haircut, that you get the $1 billion transferred to you as you park the collateral of JGBs. So the Japanese bond market has been it's had its, people think it's crazy, and people have been trying to short it for many almost a generation of investors. But the one thing we can say is it's been remarkably robust, that those bond prices have been very risk-free, if you will. But that is when the bank, so The bank receives these JGB treasuries, and then you get a digital transfer of $1 billion, right? And then with that $1 billion, you then go to other banks and you say, I've got $1 billion of collateral. I want to short the Mexican peso and buy the dollar, or I want to buy Chinese property stocks, etc. This is the credit mechanism that has taken, on the Buffett ratio of U.S. stock market capitalization to GDP, we've never been here. It's the overvaluation territory of everything, 7 stocks reaching 60% of US GDP. The one-day trading volume in Nvidia is greater than the trading volume in the Nikkei stock market. This is where we are, and there's no politician, there's no big money asking or demanding that we put a tariff on capital, because as soon as we do that, we start to resolve the overvaluation of everything, which is to say stock prices would fall. It would be profoundly deflationary. We would have a very, very deep recession. And no, like turkeys ain't voting for Thanksgiving. Yeah, but they should, because periodically, and it seems now with an increasing frequency of about 7 to 10 years, what do we get? We get nasty recessions. And nasty recessions are met by, if you will, further radicalization of monetary policy, which would be back to your monetary expansion. But nothing changes. So imagine a world where we're going to get another nasty recession. Why don't we bring it on? Why don't we burn down, the money temples? And why don't we make the richest people who are patrons for Republican and Democrat parties, and they don't care about the stock market, they don't care about the house prices, and they don't care about the price of gold, and they don't care about the price of Bitcoin. They only care about community and creating value-added activities in the United States. When is that going to happen? Yeah, unlikely, perhaps.
Unlikely. Yeah, right. Because the turkey isn't going to vote for Thanksgiving, as you mentioned. I mean, let me ask you a question here, a bit of a pivot, but just because we just wrapped up the BRICS summit, how do you interpret all the rhetoric coming out of the BRICS movement? I find a lot of it to be very sort of forward-leading, maybe a bit sensational, over the top, like things are moving faster than they actually are, like the organization is more aligned than it actually is. But I could be misreading that. What's your take, Hugh, on the development of the BRICS organization, the growth of it, and their attempts at building new financial rails outside of, not anti-Western, as they've recently said. We're not anti-Western, we're non-Western as an organization, which is different. What's your take, Hugh?
I think of them as being an affiliate of the Disney Channel. I think any conversation around BRICS is facile. It is devoid of economic logic or intellect. There is no logic, there is no intellect in the notion of a BRICS alignment. It is preposterous fantasy, and the people who are passionate and talk about it are charlatans. They do not understand economics. Yeah, you may love me, you may hate me. I speak to you about prejudice. My prejudice is prevalent as I speak to you today. I mean, look, I'm like wearing my pajamas. I mean, I've got these shoes and these slipper shoes in Tokyo, and they're so comfortable. And I am deliberately provoking the audience by not being the finance guy. Yeah, I'm not in the suit. I'm not in the Manhattan skyscraper. I'm not wearing the tie. My hair is not impeccable. I look like a bum. Maybe I am a bum. You know what? The 5 people who really understand money, they pass you every single day, and you don't even pause to reflect on them. But I'm trying to challenge people and say, you can't get past who I am because you are prejudicial. And the enthusiasm for the alignment of BRICS countries comes from a deep prejudice that we are all royally $KED'd by our democratic institutions and this notion of fiat money. And so we love the notion of a usurper, of someone, like the US. And again, this is what will provoke great comments. And, I'll look on your comments box and I'll be happy to contribute. the US is the best place on earth. All right, now that might require qualification. It's the best. Yeah, everywhere is bad, and so it's the least bad place in the world. But I keep saying this. You don't see any. You don't. I'm in London, right? And like you said, I was in New York, and like you said, I was in Tokyo, and I pass consulates and I pass embassies, and there's a funny thing. I don't see a huge line outside the Chinese embassy. Hey, can I get in? I really want some of your red cabbage. I'm ready for some totalitarianism. Russia, wow, I'm ready. Please send me to be cannon fodder in Ukraine. I'm desperate to come. Brazil. Have you looked at the share price? There's ADRs on the largest Brazilian and Mexican banks. They are in free fall. Yeah, they are below their 2008 share prices. Those economies are really, really, really shuddering. India, again, I like a curry, but the corruption in India, if you've been to India, is like the toughest place. And guess what? If you looked at their currency slides. They try and peg it as well, right? So that was all the entertainment factor. Let me tell you the principal issue with BRICS. And actually, this is very relevant and very apropos. The Indians did not go along with the Western, if you will, embargo on buying Russian oil, given the protests with the dispute. Yeah. The Indians took Russian oil, and they paid for it with rupees. So there we go. BRICS are working, except the Russian central bank got to a level of ownership of the Indian rupee, which is a weak currency. And the Russian government turned around and said, yeah, what are we going to do with rupees? There's only so much curry we can buy in Moscow. Sorry, I'm being facetious, but this is not a store of value, right? And so the Russians turn around and say, you got to pay us what? You got to pay us in dollars, because with dollars, we know what we're doing. That's your principal issue. You are like the notion of the Chinese charging and receiving, essentially charging. It's the issue for like being a Brazilian commodity producer of soybeans, and again sending 1,000 tons of soybeans or whatever, and then receiving renminbi. Well, you don't have the liberty to open a bank account in Shanghai and then put it into Chinese stocks or the Chinese government bond market, or put it on deposit, or put it in CDs, or buy a property, right? So again, what are you going to do with the renminbi, right? You're going to buy dollars. So what is BRICS? It's just from varying degrees of totalitarianism. A system of very small countries, with the exception of China.
So then, Hugh, let me ask you, if BRICS is a parallel to the Disney Channel, and the media pundits who draw massive conclusions about what will be as a consequence of BRICS are the charlatans, and I don't disagree with you. I think it's an exciting and opportunistic organization to draw a lot of conclusions out of, whether or not those conclusions have any substance at all. The timing is right for this organization to make for a lot of conversations in sort of this genre of content. But then, what do you think is the intention of President Xi, of Putin, of Lula da Silva, of Modi? What for them, it's probably not the Disney Channel. For them, there's something real to this. There's a reason they're meeting in Kazan and having these summits and attracting new members and developing the partner program. It's one thing for us to say there's not nearly as much here as everybody's making they're out to be. But you'd imagine the core members have some kind of a mission that they believe in. Do you think that's the case, or is this posturing? Like, what, if you were to speculate inside the minds of the core group, what would you say to that?
I mean, gee, I'm incredulous at the question. Incredulous at the question. You've been taking down too much of the old brick juice. BRICS, right?
Hold
China.
on, but how though? How? I mean,
Well, okay.
here's my thoughts.
BRICS is essentially China. Yeah, China is an $18 trillion economy. Global GDP is $100 trillion, give or take. So it's 18% of GDP. Second largest BRIC is which one? It's a pub quiz. India, right? I think India is what's the? Actually, I don't know what the GDP of India is, but India would be the second largest. I think it's going to be like 6% of global GDP. Next one, Russia. Russia is like between 1.5% and 2% of the world GDP. I mean, Russia is insignificant. Sure. What is Z and Putin? What are they in it for? That's where my incredulity rests. They're totalitarian leaders that want to preserve. Both of them have got. They don't have term limits. They are president for life. Okay, but let me turn it around, and they're totalitarian, and so the whole idea of having affiliation, because Brazil is not totalitarian, or maybe I've just not spent enough time in Brazil, but Brazil's not, Rio is not a totalitarian place, right? So it's kind of cool if you're totalitarian, which I find offensive. I mean, this is not meant to be a political, but I think we all agree no one would choose to live in a totalitarian regime. But it's kind of cool if you're a totalitarian bully and you get a little kind of funky country like Brazil going, hey, I want to be your friend. I want to be your friend. Yeah, this sounds fun. And that's just, that's teenagers, like every teenager. You normally, we're talking about a nation going to vote. I don't vote. I tried my part. I was very discursive with the BBC in the UK. I've made documentaries. No one's listening, right? No one's listening. Like I said, no one's going to put a tariff on capital flows. And so, I've opted out. And I live on a beautiful, absolutely sun-blissed, very, very wealthy, I've got a very small violin island in the Caribbean. System doesn't work. But everyone, if you vote, you always vote like at the minimum age you're permitted to, and you normally vote for a leftist candidate because everyone wants to be a Marxist or a communist until they start making a bit of money. And so the dabbling by the Brazilians, I just see as they're just silly teenagers in terms of their political operators. But let me turn it back rather. What is BRICS to you? What is it? What is it offering that I am missing? How could it change our world? And what is the principal problem that it solves economically for a Brazil or an India or a China? And really it's China given its significant state. What is it?
Yeah, well, it's a question that I'm personally trying to answer. And you're right. Many of the guests that I have on the program are very bullish on the trajectory and organization of BRICS.
But what does that mean? There's no BRICS currency. So we're not talking about an asset class. So when you say they're very bullish on the projection of what? What are we talking about? BRICS is like a group of almost rogue nations getting together and kind of giving the finger to the US, because the US is not totalitarian, is free, it's fun, its media and its culture is accepted by like all nations. There are queues outside embassies. What is it about BRICS? So BRICS, what is it? They can't. It's not. They're not proposing a currency because they can't join these disparate nations. And again, they would just all become little tiny satellites of China. So you see what I mean? Like people they talk, and then they say BRICS, but here I am. I'm saying, and you're a smart guy. You have no idea what BRICS is. It's Disneyland, right? It's just a theater of the absurd with like old octogenarian, unelected people talking nonsense. And then you get your guests, quite frankly, if they're enthusiastic about the projectile, about BRICS, they should be sent in a missile and projected out of space because they've got they have no meaning in this world. I'm sorry, I'm just like, I find it beyond tiresome. I'm full of contempt. And even you can't tell me what it represents, what it is. What is it trying to answer? What is it trying to answer?
Well, no, hold on. I mean, I can't tell you what they represent because I don't personally feel clear on that. I see an organization of countries with very opposing ideologies, and maybe they're sort of aligned in some direction about overthrowing a unipolar world in some way, but in their core, they're not aligned in any mission. You have countries like Brazil and India who are very reliant on trade with Western countries, maybe China less so, but I don't see alignment in the vision. But all of the conversation that comes out of the summit is focused on some sort of a BRICS settlement currency, isn't it? I thought that was the primary mission, if there was one. It's like, let's find a way to settle trade outside of the U.S. dollar system, and whether that's through Project Enbridge or some kind of a commodity basket standard. Very unclear. There's clearly no concrete path forward, but it seems to be the majority of statements that come out of the summits are that we're looking for
shall we
trade
stop
outside
there?
of the U.S. dollar system.
So if I understand the promise of BRICS is that they create essentially a new currency, like the euro, a currency that would be freely traded and would come to rival the US. So you wouldn't have to pay for a barrel of oil in US dollars. You would pay for it in a unit of BRICS. Am I understanding you correctly?
Yeah, that's how. Yeah, I think that's how I understand their mission.
So again, let's play that game.
Not validating it. But
let's play that game. Boom! Well, I've just done it. Like, we're 10 years in the future, and they decided. We got the euro, EURO, and they're like, hey, let's call it the BRIC. We got the BRIC. Can you buy me a yard of brick? Can you buy me a yard of? I'm an FX trader, but I'm selling dollars. I want to buy a yard of brick. Right? Okay, I'm preposterous, but you come back. Okay, you come back to the same issue. I've just sold $10 million of soybeans from my fields in Brazil to China. And they have sent me, let's say the BRIC trades 1-to-1 with the dollar. So they've sent me 10 million BRICs in return. Okay. What am I going to do with the BRICs? Okay. What am I going to do? There won't be any bank that accepts it. The capital account of India, Russia, China is closed. So they won't accept the money. Okay. So you see how it's preposterous, right? It's the same issue. You can wire renminbi for the oil, An FX trader will swap it for you, right? But the issue is, predominantly, these countries do not have a very robust contract law. They don't have freedom. Their asset prices have performed dreadfully over decades. Okay, and so the problem you have is societies that lack freedom typically have very poorly performing risk asset markets, and no one wants to put their capital there. And indeed, even if they wanted to put their capital there, you've got closed capital accounts. So you can see there's a circularity. The BRICS is preposterous when their chief proponents and the principal countries that make up the BRICS are running closed capital accounts. You are not allowed to transfer the money you receive from exports or imports into China, into Russia, right? And so where are we? We just keep coming back. It's Disneyland. It's the magic round. It's the magic roundabout. I mean, you've got people say I take too many drugs, and I really don't take enough. But these conversations would lead me to like being on heroin. It perpetuates out of sheer economic stupidity, and no one like me to bother to say, really, guys, wake up. This is a load of baloney. Until you can tell me how a BRICS currency system is established in a world of closed capital accounts, you are just making it up. You're a waste of time.
Have you ever? Would you entertain like a debate, Hugh, if I were to bring on? Because I'd love to have this conversation with somebody who's deeply entrenched on either side. And would you entertain that?
Yeah, sure. Absolutely. I mean, the danger of such debates is that, so if you're on the other side, you're fanatical. I'm an economist by training. And the facts are just the facts.
I just imagine in your work, you must bump into folks like Luke Gromen, who probably takes a very different stance on this than. No.
Okay. So we're in the world of social media, and again, this is the great irony of the world. Again, I said to you, I present myself to attract the prejudice. I want you to shower me with your prejudice, because if you can't see past my hair, my necklace, my T-shirt, you're a moron, and you'll never get the market. And it's better you know it. It's better you find out you're a moron, right? So the people you mentioned and whatever who are very successful in social media, I can't call them con artists, but they would never exist in my world. I 30 years of professional engagement. Yeah. I've met Soros. I've met like every legend you've ever dreamt of. I've had dinner with them, right? I speak to these people, or I did speak to them, right? Let me tell you who I didn't speak to. I didn't speak to the Luke character or any of these other very successful social media people. They would be laughed out. They're not taken seriously in the real world. But you can put a cool thumbnail and you can talk gibberish, right? And I'm afraid there's just not the intellectual expertise with people like yourself who interview them. You have to accept it. I went viral in 2010 or 2011 because I was sitting in a TV studio for the BBC in London, and they had a Nobel Economic Prize winner, Joe Stiglitz, come on. And it was in the era of the European sovereign debt crisis. And right at the beginning, and he was trying to argue that there was no issue with Greece. Right at the beginning. This was like March of, would that be 2009 perhaps? Yeah, right about that period. No, there's no problem with Greece. No problem with Greece. Now, as a journalist, you can't possibly push back on that nonsense because it's like the Pope. If the Pope says, God's a woman, you're like, I didn't know that. That's interesting. But you're not going to push back and say, hey, Pope, have you been hating the whiskey tonight? What are you talking about? You don't feel empowered, right? Whereas I went, Joe, can I introduce you to the real world? Because you, my friend, do not sound as if you're living in the real world. And so someone taking down a Nobel economist worked. Yeah, I mean, I'm afraid that social media for finance is kind of like morons talking to morons. I mean, I used to do a podcast and I couldn't bear talking to any more morons. So I just talked to myself.
You remind me of a comment that Brent Johnson made to me. He said, whenever you're hearing these comments and this rhetoric, you need to ask yourself the question, does this individual have to mark an account to market every month, right? Do they have to actualize what they're saying? And are they accountable to the results of that? Are they just providing commentary and analysis and research, or do they have to market every month and say, this is, therefore I stand by what I say and the evidence is here, whether or not I'm correct?
That's the first question you should ask. That is you should initially, it's like, if I'm really going to waste an hour and a half or 2 hours listening to you, can you just demonstrate some of your credentials? And please tell me the credentials are you work for a top tier financial institution and you chalked up an investment record. And again, let me be very, very clear. I ran a portfolio, a hedge fund. I got to a peak of about 1.5 billion around about 2011, 2012. My fund ended in 2017. I had 15 years of tenure, if you will, like, of the management of the hedge fund. My compound annual growth rate was, in absolute terms, somewhat mediocre. It was like between 7 and 8%. But I wasn't a beta guy. I wasn't charged with beating the S&P. Like when the S&P had its worst month in 100 years, I made 50%, October 2008, so to speak. But those are my credentials. Like, I remained a hedge fund manager for 15 years. Do you know what the kill rate, the casualty rate? Most hedge funds don't make it beyond 3 years, right? I know what I'm talking about. I'm market tested. And my tolerance for stupid people and coming in and it becomes meme-like. The BRICS is a meme. BRICS is like wearing your basketball cap backwards. Everyone copies it. Like, I don't know what's cool about wearing your basketball cap backwards, but culturally it becomes like a virus, right? And the BRIC is as stupid as wearing your basketball cap or your trucker's cap backwards.
I love it, man. No, this is great take, Hugh. I'm really glad we went down this path. I wasn't actually going to today, and I'm very glad that we did, because your perspective is less common, I'd say, in financial commentary. So let me pivot a little bit then. My audience is primarily retail investors. They're maybe run a contracting business or a dental office. They don't work in finance. They're just trying to figure out what's going on out there because times are a bit chaotic, and they're looking for the safest home for their capital or the most opportunistic home for their capital. And so, speaking to this population today, if you were tasked with preserving purchasing power, what assets stand out to you over the next decade as where people should be looking if they're just looking to preserve their purchasing power and retain some wealth they've created? And then maybe I'd like to get into where you see some opportunities to generate some cash.
So, Jay, what do you mean by purchasing power? Do you mean the ability to buy a loaf of bread at the end of the following year? What do you mean?
Yeah, I mean the ability to. What assets would you look at right now? Do you believe we're in an inflationary environment right now, Hugh?
So I caveated and asked that because there's this notion that there's hyperinflation or something. The price of about 88 to 90% of all goods and services in the U.S. economy has fallen over the last 30 years, 35 years. The only component of inflation we have are products and services provided by the U.S. government. I mean, that's just a fact. Now, that's a fact aided and abetted by the fact that we have astonishingly huge, and I want to say to that end, very positive international trade. Like the cheap products flow into the country. Things get cheaper, I mean, your iPhone might be the same price or higher, but its functionality and what it can achieve is endlessly better than the generation before. So what you're talking about
asset prices, though?
What you're talking about is you're talking about assets. So what you're saying is, hey, I can't afford to live in the street across the road. What can I do about it? Yeah. Or God forbid you're 25 and you're like, I'm still living with my parents. How do I get a stash of cash? How do I get established? And then, again, you get morons come on these shows and they're like, oh, buy gold or buy something, right? And what that ignores is we're in the overvaluation of everything, right? So for 40 years, China has run a 6%, current account surplus and has bought a ton of US capital, and we've priced money at the wrong level, and asset prices of everything are very, very high. There's nothing that's very, very low. Nothing. So what are you recommending to, so it used to be, I'm sure you know this statistic. If you've accumulated, let me see if I can remember. Yeah. If you've accumulated $22,000 by the age of 25, now that's kind of almost existential. My son's 22. But I mean, he don't have a penny to his name. Maybe in 3 years. So the idea that in 3 years' time he's going to accumulate like $22,000. I hope so. I mean, I don't know what your personal experience is, but I think it's quite hard for a 25-year-old to have like 22,000 surplus savings that they could put into stock markets or pension funds, etc. But let's say they do. The whole attraction for the financial social media spectrum is that based on the average of the last 40 years for the returns from the S&P, right, which is an average gain of 10.7%, the kid at 25 will retire, let's say, and he doesn't add another penny, yeah, but he got lucky, he had $22,000. That $22,000 compounds over 40 years to $1 million, right? And that's the lure of these things. I'm going to turn it's alchemy. I'm going to turn $22,000 into $1 million just by putting it in the market. And maybe I'll listen to a podcast. Okay. Now, the thing about statistics is there's a lot of lies and damn lies in statistics. It kind of depends on the year you were born, so to speak. You know, if you were 25 and you had that little nest egg and it's 1969, well, you know what? The average compound returns were not 10.7%. They were more like, I think, just under 7%. And your $1 million contracts to about 260,000. So you take an enormous haircut. So are you telling me that you would encourage someone on this calendar year, 2024, with the stock market being 2.2 times GDP? Are you telling me this is the year that person should invest and close their eyes? Because I'm not suggesting that. So then that opens up this absurd circus of preposterous claims. So then people will say, what? Buy corn, buy copper. I mean, okay, so like we just tell them to shut up because you can't buy physical futures on physical commodities. Do not create wealth. Yeah, there's a contango, there's a shape of the curve, and you're typically not embracing a risk premium. You're actually paying for the privilege of owning things, and you lose money over time, even if the underlying asset price goes up, which it rarely does. So then you're back to, you got to buy gold and silver. So let's take out the silver idiots. Like silver peaked in 1980 and only got to these preposterous levels because there was there was a scam with the Hunt brothers. But $50, brothers. Where is it? Where are we? 1980, 1990, 2000, the 2010s. Oh wow, we're talking about what, 44 years ago, right? And it still hasn't made a new high. So we're going to buy that? Oh, maybe. But I'm kind of like, you've had 44 years saying anyone that's a silver bull is just like an alien's a crazy person. So then you're back to gold. Right, but gold. So gold is intriguing because it's been around a long time. Right, they walk like an Egyptian. The Egyptians had a lot of gold, but it's mostly intriguing because there was a lost decade in the 1970s. Stocks got wiped out. There was a phenomenon similar to today. The Nifty. It was 50 stocks. They were nifty. They were overvalued. And then there was the whole OPEC and the Federal Reserve getting it right, getting it wrong, whatever, and very high interest rates. But there was a lost decade. You didn't make money in stocks in the 1970s. But as you know, gold went from $35 to $850 in a decade. And then the thing that that the commodity channels don't like to talk about is like then gold went from $850 to like $270 between 1980 and 2002. So that's 22 years when it was on its ass. Right? But the good thing from a smart financial perspective is what you want to demonstrate. And remember, I said to you that my hedge fund career, I was a diversifier. I was like gold. Like you just knew that whatever the S&P did, I wouldn't do that, and I wouldn't really lose you a lot of money. Okay, so when investing, if you will, is like the solar system, and we've got these different rotations. And we all know that the rotation, if you will, returns. The Earth presently is so far away from the sun that they expect, even Goldman Sachs is saying that they expect the 10-year compound growth rate from equities starting today to be as low as 2%. Now that $22,000 in 10 years that compounded at 2%, that ain't going to be a lot. And so the idea that there are orbits like gold where, okay, the stock market's going to have a lost decade. Well, the last time that happened, gold went from $35 to 800. Well, how likely is that? I would say to you impossible. I mean, in terms of gold's not going to go up 35 times or whatever in the next 10 years. I think the returns from investing in gold at this point, first of all, short term, because I think you mentioned a predilection for the short term. Short term, gold almost certainly hits 3,000. I mean, you're so close; it's a big number. It's like Dow 10K and all that stuff. Gold goes to 3,000, right? But gold has largely mimicked the performance of the S&P since 2005. And so I would say to you that whatever forces are propelling the S&P higher, they're also the same forces which are propelling the gold price higher. And so I can't imagine that if the S&P were to collapse, let's say, I cannot conceive that gold would not collapse in parallel with that. So there's really nothing, which is a very dull answer. But I really respect the good folk who are listening and laboring under, my assault on their senses. But let's try and conceive of something which is contentious. So again, prejudice. I'm going to say a very prejudicial word. I'm going to say Bitcoin. Okay. Now, do not ask me about open platforms, whatever, like, the plugging in and how it's going to change the world and all the zealotry and breaking away from fiat and breaking away from the ever-present oppressive force of the state. I'm not talking about any of that. Okay. I'm talking about an asset class where there's a financial future where I can buy an ETF and where I've got enough price data. Now, it's not the price data of gold, which goes back to the Egyptians, but I've got like 15 years of price data. It's trending very powerfully higher. Okay. And let's just keep it really, really simple. Okay. I said to you that global GDP is $100 trillion. I haven't said to you that global wealth is 5 times that, so $500 trillion. And the stock market, the S&P, is about $52 trillion in America. The gold market is just shy of $20 trillion. And I'm going to kind of try and convey or appeal to anyone's understanding of quantum mechanics. And this notion that the heavier the mass, the greater the mass, you need a lot more energy to propel it forward. And I'm going to say to you that it's kind of easier to propel like a bullet than a cannonball. And so if I'm trying to give an investment recommendation, which is a bullet and not a cannonball, I'm going to try and find the smallest asset class, which has a positive price trend and which is contentious. So again, prejudice makes something contentious, and people, they really, really like it, and people really, really don't like it. And that's actually the energy. Force equals mass times acceleration, all of that stuff. That contentious nature, people fight it. And that's what you want. Bull markets, you fight a wall of worry, you fight a wall of prejudice. And so finally, Bitcoin has a $1 trillion capitalization. So it's almost a 20th the size of gold. And I'm saying to you that it's the only class that I can conceive of tripling tripling, going up 3 times, and it wouldn't change the universe of the world, the financial universe. If the S&P is not going to go up 3 times, because then it would be 7 times GDP. That's just not going to happen. Gold, I don't think, is going to go up 3 times, because I can't conceive of gold being capitalized at $60 trillion and being capitalized greater than the size of the entire US stock market. I can't conceive of that. We've never come anywhere kind of close to that. So if I had a recommendation, I'd say to people, I'd put money into, and I wouldn't put it into a digital pocket. I'd phone up BlackRock or one of these crooks, but their management fee is incredibly low, 20 basis points, and I would own it. And then one of the other catalysts to that is they're going to launch publicly listed options. And that creates this thing called, well, I'm going to pretend to make up a name, but it becomes like fractional banking. It becomes a fractional investment. And we introduced traded options for the S&P in 1982. Stock market has gone up, I don't know, like 25 times since then. Anywhere where you've got traded options, the mass it seems to be a lubricant which allows the asset class to expand more greatly. There's a huge, I mean, again, a kind of meme-like thing just now for the Michael Saylor product. What's he called? MicroStrategy, where he owns Bitcoin.
Yeah.
But it's a bit like the ETF, which was popular. In fact, it wasn't an ETF; it was a closed-end fund, the Grayscale Trust. And when Bitcoin was on one of its runs, it was trading at over 200% premium to the NAV, and so you were buying Bitcoin at twice the price. And MicroStrategy is a bit like that, but MicroStrategy actually have got so MicroStrategy is the stock price is wrong vis-a-vis the Bitcoin price. But MicroStrategy, and I can't give investment advice, obviously. If you're going to do anything, speak to a financial advisor. But MicroStrategy are issuing more convertibles. And within a convertible, you essentially get an option, and you get an 8-year option. The idea of having an 8-year call option on Bitcoin, I find profoundly exciting. So to the folks back home, I think there's a clear and present danger that all asset prices could fall. They could fall meaningfully, like the S&P could drop more than 20-25%. I'm not saying it's going to happen, but I'm living in a world where the probability that could happen has reached a level where I feel uncomfortable, like exposing my wealth and my capital to that risk. If that happened to the stock market, the gold price would fall and the Bitcoin price would fall. And so were you intrigued by what I'm saying about Bitcoin, I would advise that you buy only no more than 1/3 of what you would deem to be your maximum holding, so that if there is some calamity, if there is a big price reversal, then you can go from the 1/3 to 2/3, or maybe from 1/3 to 100% of your target.
Sure. Okay. Look, Hugh, that was a fantastic wrap. Actually, I appreciate your thesis on that one, and I appreciate your time today. Thanks for coming on and pushing back on a variety of the topics. For anybody that wants to hear more from you, Hugh, I know you have a YouTube channel now, and I think it's just Hugh Hendry, and your content's up there. But you're writing a Substack, which is where I might push people to. What's the name of your Substack, Hugh?
You would think I would know. It's either Hugh Hendry or my nom de plume is I am the asset capitalist.
That's right.
And the asset capitalist actually comes from someone I reach and take great inspiration from. Was a world-renowned clinical psychologist from Glasgow, and he was reached the zenith, if you will, of his powers in the late 1960s, and he hung out with Jim Morrison from The Doors. But there are videos or flaky black and white images of him speaking at the university campuses across America. And half of the audience listening swore that he was like high on acid, and the other half swore that he was the smartest, like most genius-like person they'd ever heard. And he called himself the acid Marxist. And I ain't a Marxist. Okay. And I ain't a Marxist because I'm a very optimistic person. I think Marxism is loaded with despair. It's loaded with, it's essentially short you and I. It's short humanity and the genius of humanity. Marxism believes that there's a permanent plateau. You asked about what may be driving the allure of someone like President Xi to the BRICS, etc. And that would come into this notion that he pivoted several years back from promoting capitalism within China. You know, they took down the Alibaba guy, and they started regulating very heavily a lot of the hot sectors. Kind of in the belief that I think he's a Marxist. He believes that we've reached the absolute permanent level of prosperity for China. And now it's going to be the division of that prosperity amongst the 1.3, 1.4 billion citizens. So I'm an asset capitalist. You got to be high to see the future. The future ain't going to come at you via linear spreadsheets and linear sharp suits. But it's a capitalist because we keep pushing the final frontier. We're now in the throes of AI, which is going to change the world in a manner which is just hard to do justice to with the lexicon afforded to us. And so Asset Capitalist on Patreon and on Substack, or Hugh Hendry. And I also write on Twitter most days.
Yeah. I found you here on Substack. So it is easy to find Hugh Hendry or at Acid Capitalist. No, just at Acid Capitalist.
Yeah. So it's join
the growing community.
Yeah, it's acid. It's not sometimes like when you do the vocal notes, it writes asset. You know, that would make sense. Like an asset gathering capitalist, that makes sense. It's like, no, I'm a capitalist. I'm a capitalist and I take acid because like I can't deal with anyone talking any more nonsense about BRICS. But there you
go. Look, Hugh, I appreciate you, man. Thanks for coming on. Safe travels. You've been all over the world. You're heading back to St. Bart's soon, I believe in a week. So enjoy London, and I appreciate your time, man. I'll send you a link to this when we publish.
Super. Thanks, Jay.